What's up? How's it going? Space, welcome. We're just gonna wait a few minutes for people to join. All right, just gonna give it a few minutes for people to join, and we'll get on it. How was your trading day today, Space? If I may ask. I don't know if you know where the chat is, but it's minor profit. Okay, I see it. Good to know. Good to know. Had a pretty uneventful day. I'm very hesitant to trade on days, before CPI went over. Although the market always, some people say that it's gonna be choppy because we have a news event coming up and this and that. In reality, the market kind of takes a boat before any events, and you can tell that the boat that the market has placed on this whole week is being to the upside, right? Yeah. So given that, there has been situations where the market votes the incorrect way, and I don't know if you noticed, but I placed an alert for some puts, and it's not that I think that the market is bearish. I just think like if the market has placed a vote and the whole market ends up being wrong, then there's gonna be a lot of profit potential on the other side, right? Kind of like actually, let's start. Let's give an official start. It's only two people right now. That's okay. Um, we got YouTube going on. Maybe I see Kevin and Michael are there on YouTube. So what's up, guys? There's a little bit of delay over there, but I'm gonna keep watching on both chats. I'm gonna keep track of both chats. Um, I'm looking at the other screen. Hold on. All right. Watching both screens right here. Boop, right there. All right. So first thing first, like I said, there's not a lot of people. It's fine. This is gonna be a quick one. There's not a lot not a lot to talk about. I can tell you what has happened, and I can tell you what are the next roadblocks to overcome on the next trading sessions. I have a few key points. I'm gonna start off with SPX. We're gonna go to NDX, and then we're gonna check out the ROT as well, and DJX, the Dow Jones as well. And I'm gonna do this all on the index. On the index, I'll probably look at the futures a little bit, but I want to keep inside the index because the most of the activity is concentrated in the cash session, right? So that's where it all matters. So right off the bat, let's take a look at a little bit of SPX right here. We know what has happened today. It was actually, I kind of was on the wrong side of the trade yesterday, given that to me my perception of this was that this consolidation area broke to the upside and made a failure and went back down, right? So one of the rules that I have is usually something like this is super bearish and then you end up trading at the lower end of the bounce area. It did not happen. We actually had something very bullish, which is the bounce of the daily 20. I use the daily 20 a lot, and I think everybody should incorporate it into the trading. It helps a lot, but you'll see a lot of the times where it becomes resistance on the daily, and when you're on the other side, it becomes support, right? So that's very bullish, and this is something that we're gonna see in a lot of the setups on the daily, And if we see that setup on the daily, we can actually, as long as we have some kind of candle structure, and if that around the daily 20, we can see possible longs into, I don't know. We'll look at some stuff. I think semiconductors are doing something similar. And basically, and this is, I'm keeping note of this little inefficiency right here. We failed to fill the gap, which is even more bullish. You know, when you don't fill the gap in the first 2 hours or so of the trading day, it's probably not gonna get filled. And we just kept going forward. We also had a gap right here, right here. We had, and this is in past term because it has been fixed, right? So this was basically a long target as well. You could tell that some of the market action today, I mean, basically came in at the close. You're already trading inside the gap, that has happened on the priors and completely failed it, right? So that inefficiency in the market has been fixed. So we can just get rid of it. It has been fixed. Trading action has happened right here. Now we do this one. We do have this one underneath us, and the S&P doesn't leave gaps for that often. It'll create a gap somewhere and it'll fill it later. Gap somewhere and it'll fill it later. So those little inefficiencies we get an auction trading on those prices later on. So we have to identify we have this going on. So if you find an opportunity to get a little bit of points right here, some SPX puts or whatever, we're coming into this level. If you're tapping into this level, you can, I guess, rest assured that this level is gonna get filled right here, right? So we'll keep that in mind that this may play some part in the future if we do end up coming down, because we don't know what's gonna happen, right? I have to remind everyone that we're walking into CPI. That's right, Kelvin. Kelvin. That's right, Kelvin. We fill the gap that we just had right there. We're coming into CPI and it's a non-binary event, right? I do. There's an $80 expected move tomorrow to up or down on SPX, and I think that the market, in my perspective, has already voted that it's going to be a cool CPI with this move, right? It takes a decision, but some people will say like it's gonna chop in because we have an event, or the market's gonna wait. The market doesn't wait. The market takes a vote, and if we do end up having a cooler CPI, we might have some upside. I'm not gonna say we don't, but it might be minimized, right? I mean, I could be totally wrong, and this thing blasts all the way to this level right here, but as of now, the market, I think it has placed a vote, and you can tell that the market has priced in. That's where the phrase comes on. It has priced in the upper move. Now, what it has not priced in is a negative CPI. So that's where I think a lot of opportunity lies with lot of ins and puts, right? Not a real trade, because I remember everyone, it's a non-binary event. So this thing can, I mean, I'll take you back a little bit to the past where the market had priced in a bad CPI by then. So we do have, remember this was a CPI day. We had a day where we actually rejected a very key area, came back down, did not even hold the daily 20, did not hold the 618 retracement on the push higher. You notice right here, we traded below. So the next logical place for the market to have dropped to was basically this low right here, if not even lower right here, right? On a bad CPI and on, I don't know, a week or two of trading sessions, right? But now when you see a close like that, where the market really closed at the lows, had a very strong close at the lows and everything, you can take into account that the market has voted that the CPI was going to come in hotter. It's going to keep increasing. But instead, you get the other side. You open on a very huge gap up, and it goes even more, right? So that was a big move from this close to this close of 5.6%. So that was a huge day on SPX. Now, I'm not saying this is going to happen, but I could eventually see if we have a bad CPI coming in from this close, doing the exact opposite, and doing a negative, I don't know, 5% day up all the way into this level right here, at least to the area low. Because if you start coming down and tapping into this area right here, right, you're back into range. Actually, let's more clear, right? If you're tapping into this range, everything that built long right here is gonna start getting out at the door, and the door being so tiny, we're gonna see those prices right here. Now, this is the outcome on a very hot CPI. On a mild CPI, that this is expected. Okay, we may drop, but I don't expect a huge drop, right? So we'll see. We'll see. I think if we do look at this chart without putting any, without thinking that there's gonna be a non-binary event, and that there's only technical analysis, right? That it's only price action what we see. So one thing that I want to point out, I'm just gonna do it weekly so you guys can see a little better, that we do have this downtrend right here. Now, I have traded a lot of trend lines in the past, a lot of downtrends like this, or even uptrends, right? But the difference whenever you're coming into this test right here, where you have seen rejection, if we do end up going positive, I really don't think we're gonna see that big of a rejection. It can easily cross it, because what makes a difference from coming in from into the trend line again, like the first time we came down, we come up for the first time, we come even lower, we come up for the second time, we come even lower, we come up to the third time. Now, what is the difference? That we didn't have to come on make a new low to test it again. So the next time it goes, it's coming in with a higher low from this in relation to this low, right? From this low to this low is a higher low, and if we hit this trend line, I don't see a problem with the market breaking it to the upside, right? So basically, I guess if you like shapes and forms, we can call this what? A little cup and handle that's breaking to the upside. Cup right here, your handle right here. I don't use shapes and forms, but it's basically that's what the formation is, right? You retrace 100% of a bearish move into a higher low, and possibly you're gonna get a move, right? So the break of the cup and handle comes in after you break this high right here, and if it's a measure move, I haven't used measure moves in a long time. You're coming into a target of extrapolating the size of this cup into the bottom of the handle to the top of the handle, boom, and you'll have a price target of somewhere around 43.77. Obviously, this doesn't happen in one trading session, but if this is gonna keep happening on the weekly, then that will be the outcome. That will be the idea, because I don't think this trend line is gonna do any resistance when we come up to it. At those highs. We also have an inefficiency right here, so keep that in mind, right? So we do have a couple of inefficiencies. This one right here, and this not this one. This one right here, and this one right here, to go for in the future. That's what I got right there. Very bullish. If there was a place for the market to turn around, and I love that the market is positioned on a key level ahead of CPI, it's basically here at this highs. So I do like the way this setting up for a hot CPI. Hopefully, that's what I'm hoping, that we have a hot CPI, so I can enjoy some profits on the short side. But yeah, that's the idea, right? That the 618 is right here, and it'll be the best place for the market to turn around and start tipping down. On the same note, we're gonna look now at NDX. So now we know our key areas, right? The trend line, the JP Morgan color trade strike. So this is something that to note for in the future as well. We have this area, and keep it in mind until March, the last March expiration, which is the 31st. There's a quarter end, and if we end up with the market way higher, like a week or two before the expiration, I would think that the market's gonna trip and fall all the way back down to this. and it will still be a bullish pullback, as long as you're coming in to test this trend line, right? So that's talking all the way into the future for the next quarter end, but just keep it in mind. It's 40.65 for the next quarter end. All right. Gonna go to NDX. All right. So kind of on the similar fashion, I'm gonna get rid of this trend line right here. The market is positioned in a key level, not so high as the SPX, but it's a key level for NDX nonetheless, which is a 50% retracement right here, right? So if the market was to turn around, this could be a good spot to do so. If not, the 618 right here. That's what I got on that end. I really don't see much going on elsewhere besides a little bit of a divergence right here, but that's basically it. That's basically it. We do have a trend line on the weekly, but I think it got broken on somewhere. Yeah, it has not been very well used lately. I guess you can actually draw something new onto this, you know, something like this. That it may be something that we're gonna have to watch out in the future. Something like this. Well, it's gonna be hard to anchor it, but yeah, because you already hit this right here. Something like this. With a little bit of width, so it's an area, not an exact point. But yeah, this one is gonna be trickier, right? SPX does shows that it can break that trend line easily because it's a higher low, but this one, it has this excess low, so that's bullish, right? It has this excess low, like a maximum pain low, and then but we have an equal low to this low in relation to this low right here. So we did make this higher low, but then an equal low right here. Essentially, not that bearish if you don't make a deeper low, but certainly not what you would like to see coming into a trend line, right? Because we might as well reject this in the future. That's what I got going on NDX. We're gonna move over to small caps, and this one is good to analyze the rut because small caps has been running and they're running hot, and sometimes they take off early before everybody else, and this is what happened essentially lately, right? So we do have a trend line that I kind of got a false break right here. Maybe I didn't anchor right, but got a breakout. We're breaking it right now. If it's any indication, I don't think it is. We're coming in from a higher low right here. Basically putting a divergence from this low to this low, so that's bullish. And we're putting in a higher low. Same thing about a cup and candle on the weekly. And in relation to the last swing high, which is this one, to this one, you are above the 618. Actually, let's take a little bit of this high right here. So you're about the 618 around the 65. This one, it looks a little more bullish. IWM has been performing a lot better than the rest of the market. I do think it's running pretty hot, but it's doing a very good job, right? We'll put in a close about the 618. We're still coming into CPI, so that could matter nothing, given that it's a non-binary event. That's what we got going on the rut. Now, another market that has been very bullish is the Dow Jones. Now, this one is also at a key level, but take note that it went higher on Monday and closed just slightly higher than the Monday close, right? So this one has about the same idea. How far are you from the fibs? And it's very important, right? Because if anybody's holding off of this move, where do you think the chances are that the market is gonna get a full 100% retracement? It will be whenever you're above 2/3 of the action, right? So when you're trained about the 618, you will put this one in place. I think it's best seen on the futures probably. Oops. And I'll put down to the weekly. Yeah, so the weekly has a little bit more of a view, right? So this one actually has a very clear picture, like to look in the past, right? The trend line break, the trend line retest, the weekly 20, weekly 50 is still holding, cup and handle, if you want to call it, bull flag, everything, right? But it's just, and remember, it's not bullish until proven otherwise, right? Or the same, it's not bearish until proven otherwise, right? But if the market was to turn around somewhere, like it's also at the same place. So, well, not at the same place, but it's between the, yeah, right now it's between the 50 and the 618, so it's a good place. But I think the index was a little more clear, right? So we're at the 65, not the 618, 65. So the 618 got rejected, but then the 65 is right here. Now, why do I keep the 65? Because it looks like the 618 retracement has not been a very working strategy lately. So we this it looks like a lot of times the market just does this little poke, you know, um, to keep on the gap fill. So that's what I got. We cover all those indices, and I think it's very clear, right? If we start crossing above this highs, we might get a full up 100% retracement, and the opportunity on SPX, how high it can go. It's pretty clear. It's pretty clear. I'll keep in mind this area right here. This area is gonna be an important area coming up in the future. And yeah, that's what I got. I only 22 minutes. Nice. So I don't have setups for tomorrow. I wish I had them. I think it's best to stay away a little bit from setups. And I mean, there is opportunity to some names, right? Like if we end up having a cool CPI, um, we have some stuff that is already, you can see bounces around the daily 50 into high, making it could have a continuation breakout off of this level and target. Um, what else? We have an inside candle on Netflix, so we can place alerts on the lows and then on the highs. We do have some bearishness on O'Reilly. I know we don't trade this much, but this one could be a good day trade right here as well, a good swing or something for a lot of points, a good lotto. You know, we'll find some kind of setup. Like I say, if we end up having a bearish CPI, some of the opportunity lies. Um, Let me see. No, I don't have a sector. Actually, the other way. The other way. If we do end up having a bullish CPI, a lot of opportunity. If you go down to the weekly and there's some sectors, let's see how the XLY does not give you an opportunity right now. It could make a lower high on the weekly. This one is gonna be a main watch when we hit the weekly 20, right? So if we end up having a bullish CPI, this is in watch when we hit that. And obviously this is also at the 618. A lot of stuff is like that. This is consumer discretionary. Healthcare is one of on the weekly is one of my favorites. If you notice this weekly candles with lower highs and lower lows, but this one is bouncing exactly at the weekly 20. So if the next week has a higher low and a higher high, something like this, or I don't know, something like this, that's a very big possibility. And then we're gonna have a lot of setups that we can look into healthcare for the upcoming week. What else I like about this is let's look at XLK. XLK at the daily 20, below the 50% retracement on the weekly. Jets has been on a tear. This is what I'm talking about and it might not be done. I mean, airlines are overextended, obviously, but when you look at the weekly candle, it's about the same setup, right? So we might encounter what has happened right here in other markets. Something about a 100% retracement on the bear side, a bullish higher low, right? And then a breakout, right? It's coming into a 10% extension. The whole idea of the cup and handle, if it's a measured move, gives you this extrapolated move, so it's near an end into it. I do think airlines are extended, but I mean, this is just an example of what the market is doing right now. You know, it can do in another markets. If a soft rain occurs, semis are likely to lead the pack, right? So, do have a setups on semis? Not that I think that semis can lead the pack, but look, is this does this looks like Jets but without the breakout? It certainly does, right? You have 100% retracement of a bear move. Your higher low on AM. This is AMD, by the way. No close below the 618, and then you start having this move. Now, weekly 20 is coming in. This bear retracement is coming in. So there's opportunities. If you go down to the daily, yeah, we do. If we do have a cool CPI, I think we can have some kind of moves, right? Like this is already basing about the daily 20, so we can probably see a little bit of a push higher. We do have a cool CPI, so there's opportunity on this one right here. As well for Nvidia about the same idea. It's poising to going higher right here. Yeah, and it's still below retracement. You can at least get the 50 or the 618, you know. So this one's got some room. I like MU. MU was gonna be part of a day trade today. I just didn't pull the trigger. This one also had an inside candle break to the upside. You know, as of favorite retracements, you know, you're looking at it's topping at the 618, so it makes sense where it's selling. You know, a lot of the markets are at key levels for turnaround. It's just cool to see. It's just cool to see. TSM can make a move. Let me see. Qualcomm. Same idea on Qualcomm. Higher low right here. Yeah. We got some names. But just make sure you also have some bearish names, right? I think Okta is one of my bearish candidates. As we end up having a bad CPI because it's a chart that I don't know if it's better to look for something that looks like it's gonna break down already, or look for something that is overly extended bullish and we have a higher CPI and it'll turn things around for them, right? But there's opportunity on semi, so yeah, I'll be looking into some. If we do have a bullish continuation, I'll be looking at AMD specifically. I like that name. I don't like the options lately. They don't offer big returns like they used to. When AMD was in the 90s, it was perfect. Now you're lucky, you know, to make some decent percentage on those options. But I mean, it's still tradable. It's still tradable. But yeah, for you guys that miss the charts and chat the beginning, we talk about the index and all that, SPX, IWM, QQQ, and the Dow Jones. You can go to a YouTube channel. I'll give you the link and you can watch it. I'll see somebody has a question. It says setup from Tom probably won't matter. This thing is going to be a looks good. Yeah, setups right now for tomorrow are not. I guess Tom is tomorrow. Are just it's gonna be a little bit. It's worth doing homework, guys. It's worth it. Do not put your trading plan in stone because of CPI, right? But it's good for practice and it's good because for any reason that CPI comes in cooler, you know, not hot, you know, not big. It's just it decrease something mild or as suspected, and the market opens flat. Then we look for that homework to work. But as of now, like you know, mark your levels and look for setups and whatnot. Yeah. Tell me to check out Coin. Yeah. Coin, Mara, and Ryo are gonna be pumping after hours. Looks like Bitcoin made a lagging move to the upside. It rallied throughout the day, a little bit. If you notice at the hourly candles, but it made the move in the last 2 hours to the upside on I mean, all the way through, right? If you look at the hourly right here, right? This is a trading session, the cash session. So we did rally on Bitcoin, but the 2 hours after the market closed, it just this thing pumped a lot. So we are gonna see some of these names, like Maro doing great after hours, but you had seen that this one actually rallied higher than Bitcoin, before Bitcoin. I'm sorry, not higher than Bitcoin, but before Bitcoin. So it's something to know, to keep an eye of. All right. It's possibly, and not to take away from time, but HUM looks like an inverse cup and candle to you. Let me look at HUM. So HUM is part of the healthcare sector. It had a very green day, apparently. Yeah, a trading day higher. So what I will do is put in relation the last high to the last swing low. Boom, real quick. You train about the 618, so it looks clear to go higher, of just based on that perspective. You would like to take a look at this on the weekly time frame, which is going to be this weekly high to this weekly low. And essentially, if I was long into this, I would be looking at targets like this level, right? 504 or so. My guess is that you've seen the cup and handle on some smaller time frame, right? Like the 15-minute or the hourly. I am not sure. I think it's not yet as a cup and handle like other names. We do have a trend line right here, so we gotta watch out for this. And clearing this trend line. I think if I was to day trade this, I will combine it with the healthcare sector, given that XLV has placed this bottom at the weekly candle low, and the weekly 20 MA. I'm sorry, and we just have to see, since we already had a look. This can be a 2 down 2 up strike reversal. So you would like to see next week to break this high right here. If you want to have a big breakout, something decent, some moves out of it. I hope it makes sense. Because the chart itself, yeah, basically look at this candle formation right here, right? This is on the daily, so you will look for something similar, but on the weekly. If it makes sense. I hope it does. It's basically, it's what we call a 2 down 2 up, right? So it's basically this, like two down and then 2 up, a two up candle, right? That breaks the range to the upside. You break this high and you have a lot of points to go for. All right. Thank you guys for coming into the Charts and Channel. Unless there's any other suggestions, then we're looking at. I think somebody was trying to make asking me about for Bitcoin, and on the weekly, this is gonna be this level is gonna match with the weekly 20. So this could be a very big resistance. So that's something to watch out for right here, which is like a little bit about 18,600 or so. Thank you guys. I'll see you next time. I hope you enjoyed it. I hope you learned something, and I'll see you until the next time. Well, hopefully we have a green day tomorrow. I mean, not a green day on the market, but a green day on our portfolios. See you out. Kubito out.